Good afternoon, everyone, and welcome to Stock Market Today. It's Alexis Garcia and Ed Carson here to break down the market action in today's session for Tuesday, February 13th. And Ed, earnings and hot inflation data putting a chill on the market. The Labor Department's Consumer Price Index report showed a 0.3% rise in prices. That was higher than expected. So we saw what wrath the CPI numbers brought. But Ed, what do you have in store for us today?
Well, I want to take a look at one of those earnings disappointments, Shopify, even though they beat views. Also want to take a look at Copart and MercadoLibre.
All right, we'll get into those stocks, but first, let's take a look at the major indexes. The NASDAQ down 1.8% today, the S&P 500 down 1.4%, the Dow also closing in the red 1.4%, and small caps taking a beating today, down about 4.1%. So Ed, let's take a closer look at the NASDAQ. And we saw some tech names falling. We had earnings, Amazon, Microsoft drifting lower. What are you seeing here with this chart?
You know, the NASDAQ is still, it sold off. It approached this 21-day line sort of a couple of times today, but did close off lows. The NASDAQ doesn't look too bad. I mean, that's a 21-day line test wouldn't be a surprise. It's happened a number of times along the way. So it could be healthy in regards, but we just don't know. Is this today a one-off? Are we going to test the 21-day line? Could we go much further? I mean, there's some froth in the market in terms of some stocks that have really gotten extended. A lot of those actually held up today, but you could see a more significant pullback. So that's what we're going to be watching. It's like today by itself is okay. It's just a question about how fierce of a pullback we actually get.
Right. And talk about similar action in the S&P 500. And, we had Justin Nielsen saying that things have maybe gotten extended or so above extended. But what are you seeing with the S&P, again, coming off session lows today, but, approaching that 21-day line?
Yeah, we have been getting up there, as we were 5% on the S&P, we were more than 6% on the NASDAQ, and that was getting extended. So now we're not extended. It wouldn't take much. If we bounce right back, we'll get right back to that situation pretty quickly. But yeah, like the NASDAQ, this is normal. It's probably even healthy. Again, it was some losses, some pretty sharp losses right off the bat, and we've been used to sort of a nice steady rise or strong gains. So maybe a little wake-up call, and we'll just have to see if it's a wake-up call or ends up being a sort of a longer nightmare.
All right, well, let's take a look at the Dow, because that tumbled a little over 600 points today, that closing below the 21-day line. So what are your thoughts there?
Yeah, there was weakness. The thing is that while we saw some tech names sell off like Shopify, a lot of them held up better. And so you're seeing the Dow and the small caps, and we'll look at other things that suffered bigger losses. Okay, this is just down a little bit below the 21-day line. I mean, if it bounces from here, we'll be talking about, it found support around the 21-day line. So it's not really seriously breaking that. And obviously, this hasn't been the leading index. You just look at the relative strength line. It's been lagging the last few weeks. It's really been lagging for a long time. The leadership is more in the NASDAQ and S&P 500.
All right. Well, speaking of small caps, big decline there today, closing near session lows. And we've kind of talked about this 200 or 2000 level being this key level of resistance. And again, just kind of running into some thorny areas around this key level.
Yeah, look, for a few days, we had here the small caps were taken off. Really was getting close to like a 2-year high. And to lose so much of that in one day, it did close, late in the rally. There was a late flurry in the last 15, 20 minutes. So at least the Russell 2000 ETF closed right on the 50-day line. So that's going to be a key level. But yeah, that's disappointment. The breadth was extremely negative. Yes, it was a down day, but the breadth was like more than 10-1 negative on the NYSE. Pretty sharply, sort of like 5-1 on the NASDAQ the last time I looked. Those are really extreme numbers, much worse than you might have expected from even the major indexes declines.
Yeah, we'll take a closer look at breadth, but let's check in on the Treasury yield first, the 10-year Treasury yield. That's spiking up today, up about 3.5%. And no doubt, inflation news. What do you think investors are reacting to?
Look, we had a huge tailwind. You know why the market rallied since late October into this? It's like, well, mostly because a lot of the Treasury yields coming down and the fact that the Fed was shifting from we're going to be raising rates to now we're going to be cutting rates. The last few weeks, the Fed has really been trying to rein in expectations of rate cuts, how many they'll do. Now the market doesn't expect rate cuts after today. It doesn't expect rate cuts until June, and maybe three, maybe four rate cuts for the year. That's more in line with the market was expecting. It's not the worst thing. It's just that it's certainly the Fed is not that tailwind that was giving such a massive gains to things. So definitely one to watch, clearing some resistance here in a really decisive way.
And you mentioned market breadth, and let's take a quick look at RSP. That falling today down about 1.7%. So what is this then telling you about today in terms of some of the moves in different sectors?
I will say I was encouraged by the last minute bounce because, boy, this was on the 5-minute chart. It really, just about half an hour in, it was at the lows. It was coming down to the 50-day line and rebounded quite nicely. So that's nice. And again, RSP isn't doing that badly. It was at a 2-year high as of yesterday. So that's been holding up better, but still one to watch. We're going to face a test. The S&P and the NASDAQ, can they hold the 21-day line or cold point? Can indexes like RSP or the ETFs like RSP or the Russell 2000, can they hold the 50-day line? We have a test here after just sort of marching towards highs. Now we're facing tests on the other side.
All right, well, let's take a closer look at Shopify. That's ticker SHOP. Beat earnings and revenue views, but guided slightly higher. I guess that wasn't enough for investors. Shares tumbling today about 13.4%, closing near session lows and heavy volume and breaking below that 50-day line.
Yeah, this was a pretty ugly sell-off, and it didn't come back. So some stocks that had earnings, they sold off, and then they bounced back, at least recovered somewhat. Not this one. And I mean, it tried to for a while, but as you can see, it came up initially, but then faded off and closed right at session lows on this intraday chart. As you say, heavy volume. And I don't know all the reasons. There didn't seem to be a clear reason, but you don't necessarily look for a reason when this has happened. For people who are recent buyers who bought anywhere in this area or bought off the 50-day line, they probably wanted to be getting out because this is giving up all their gains or maybe even more. Definitely something to consider even if you bought more in here. It's like this is a heavy loss. That's a 14% drop in heavy volume through the 50-day line. So when you be thinking is that, if you have a portfolio, and a lot of people probably built up their portfolios quite a bit, you have to be thinking, well, which stocks are holding up, which ones are showing more, resilience, and which ones are starting to struggle more. And, if you're looking to pair exposure, well, it makes sense to be cutting the ones that are having a little bit more trouble in this market.
All right, well, let's take a look at Copart. That falling today about 2.5%, but trying to find support here maybe at that 50-day line as it gets closer to that key resistance level.
Yeah, so it did bounce off of that. It couldn't get back above the 21-day line. That's all right. It's not actionable yet. If it could get back above here, it's like it does have a buy point. Has earnings in a week. Well, no, and actually that's not true. I'm not sure if they've decided that. They probably will have earnings within the next couple of weeks, but I don't think they've set that. Earnings growth was the best in the last quarter, was the best in a few years. Revenue growth has picked up. On the downside, the relative strength line has weakened, and that's partly because it's sort of it hasn't made a whole lot of progress in the last several months. But this is a long-term leader. And why is it a long-term leader? Because of steady, strong growth, but it's also because of generally that's had long periods of outperformance. This is the RS line. You can see it's had a long track record of outperforming. So while there's a temporary lull because it hasn't really taken off as a defensive growth name versus these high-powered names, it has a really strong track record. So people should be paying attention to this name.
Right, and you can learn more about that by checking out our stock of the day column. That was covered there today. And our final stock today, MercadoLibre, that one taking a bit of a slip today, down about 2%. And again, really coming off testing this 50-day line. That one also has earnings due in a couple weeks.
Yeah, so it came back through the 21-day line, lost that, but found support near the 50-day line, near this buy point. And actually, on a weekly chart, it did find support, at least for now, at the 10-week line. And on the 10-week, on this chart, you can sort of see it sort of had a fairly gradual pullback I mean, this is a nice way to be pulling back to the 10-week line. You don't want to see these decisive plunges like we saw with Shopify. You want to see more of a dignified drop back down toward the to a rising 10-week line. So this one has been a real strong performer over the past year. Maybe finding support exactly where you'd want it to. Earnings are coming up, so that would make it buying that risky, but it's definitely one to watch. It is interesting that some e-commerce names took some hits with Shopify. I mean, this isn't really, it's Latin America and all that, but this one held up pretty well in that environment. So one to watch in this pullback to see if it can hold up well.
All right, Ed. Well, thank you so much. And that's it for today. We'll be back with more market analysis tomorrow morning, starting with IBD Live. You can head on over to investors.com/IBD Live for all the details there. And we'll see you right back here tomorrow after the close.